Hey guys, this is day trading on double volume. And the importance of day trading, I think, is not just so much to make a small profit. You can spend a lot of time at day trading. But the thing is that with if you use options, I'm looking into options, you can make like incredible um, profit, like 100% type stuff. So like you could trade $1,000 and make $1,000 and because you're making like 100%, um, if that makes sense. So a lot of people look at day trading like as just making several small different trades, but if you use options, you can make a lot of money in day trading. So there's really two reasons to day trade. One, just to do normal day trading, and then if you want to get complicated trading, I think options are complicated. I'm not. I'm just looking into it. But you could make a lot of money day trading with options. Um, if you day trade with options, you're actually reducing a lot of risk. Um, I don't want to get into the reasons for that, but a whole lot. But options will, if you have an option and keep it long term, they do these things called expire, and you could lose everything. So if you day trade, there's no way that it's good. With options, there's no way they're gonna expire. Okay, so let me explain what day trading on double volume means. See my mouse here. There's two in my program. I put these. When you see these triangles here, these double blue triangles, that means a blue triangle means that extra on a certain candlestick or bar, there's high volume compared to the rest of the average volume that's being done. If you see two triangles in a row, two blue triangles in a row, that means it's super duper volume. Two candles or two bars in a row, you have blue triangles. That means something's got to change because it's a lot more extraordinary than average. The row above the blue triangles are these squares, and though that's called momentum. And so you see this red square here. That means the momentum is going down, the trading momentum. And then you see a green square. That means momentum going up. So in this case, since the last green square is green, that means overall it's going up. So it means it's going to be got to be bullish. And so you're looking when you see two blue triangles and then the second square is green, you're looking for a bullish move. So that means it's going to go up, and you want to do a long trade. Long just means buy low, sell high. If this was reversed, you had a green here and then a red, that would be it's going to go down, and you'd want to do a short. So I don't really want to teach you what shorts are, but basically, you instead of buying low and selling high, what you're doing is selling high and buying low. It sounds weird, but that's the way it is. So what's really, really, really important for day trading, at least from what I can tell, this is like a long-term trend, represents price graph. You can see there's this one going up, that's an uptrend, and this is going down, it's a downtrend. So I labeled this uptrend, downtrend. And what's really important in my method is never short on an uptrend. So same thing with a downtrend, never do a long on a downtrend. So with day trading, what you're trying to do, you're looking for the pattern to be established. So like here, you can see that right if you start out the day here, its pattern's not established. It's just kind of going up, down, down. But by this time, the pattern's established, so you can tell it's going up because you have two peaks and two lows. And this is an uptrend. Over here, get to the top, it still could be going, but it's really going sideways. This is like an M. it's kind of classic. You know, when you reach a peak, it does an M. Boom. But on the downtrend, you have two peaks going down. So maybe by over here, it's kind of established. Or maybe by here. Peak, lower, lower, lower. Okay. Pullbacks are up, pull back, down, up, pull back down. So on an uptrend, you're going to try to catch from here to there. And so when you're doing day trading, never short on an uptrend. So what we can do long. So what you try to do is catch this peak here, or catch the valley here, and go up. So what we're trying to do is at this. We want to have a double volume. So what we do is look for the double volume. The double volume, this double green, double blue triangles, might occur here, but what we're waiting for is for the bottom signs. My program gives bottom signs that tell you when you're at the bottom, and that when it's going back up. And we'll look at that. So we'll look at two cases, an uptrend and a downtrend. So first of all, let's look at an uptrend, and then let's look at a downtrend, and then I'll combine it all in both of them. The uptrend is like, here's some examples. Here's what my program looks like. You'll see there's three blue triangles in a row. So this is like bam, bam, bam. 3 candles, people are buying it. And that means this is an example, a zoom in of an uptrend. It's been coming up, and then you have a pullback. So during this pullback is where you want to enter. So you got triple volume, and the last rectangle, momentum square, is red. So that means it's going to be down. But what this really means is if this, it's going to either be a pullback or it's going to start reverse and start a downturn trend. And remember, never short on an uptrend. This is an uptrend, so we're not going to short here, but we're going to wait until it gets to this little pullback bottom. So my program has 3 B's, 1, 2, 3, and if you look, I also put a blue triangle above a candle. This B doesn't have a blue triangle on it, so it's just like average or below average trading. In fact, if you go straight above it, it's a black triangle, which means like average trading. So this is kind of a false bottom. This one is a red triangle that means down momentum. Blue triangle, red square, still going down. So this isn't a good place to enter. It's still going down. This one doesn't have a blue triangle. This one has a blue triangle, and it says it's going up. So this means the trend is really good. It's going to start going up now. It's reached this bottom is legit, and I say that this bottom is a fulfilled down. In other words, these 3 triangles here says they're on an uptrend, but it says that the momentum is going down, and so all the investors and traders are saying, hey, we want to get rid of it, our stock's here, and then the price goes down. And so this has fulfilled that down. Now it can start going back up again. And so this is your enter point. The bar after this one, that's when you can get in. So you get in on a market trade. And then you notice it starts going back up, right? So on the overview thing is what we had was a triple double volume here. We waited for this pullback, boom, then we entered, and now we're trying to get to the next peak up there, And the thing is when you don't know when you're trading if you're at that peak or at that peak. This is like the very top peak, right? So all we can try to do is catch this peak here, or catch that peak there. But you say, why don't you try to go from here all the way up to there? You could do that, and there's nothing wrong with that. But what might end up happening is if you're here, if the double triangles occur here, double volume triangles, and you get in here and you try to catch it up, it might reverse. So you take your risk. You will get it up if you try to get here, but if you get it here, you end up might not getting anything. This might be the reversal point. Um, Whatever. So, anyways, so in this case, it's going. See all these little indicators. Also, the use. You just plain as use all the way up, and all of a sudden there's all these T's. In this case, this doesn't always happen, but this thing thinks it's the top. So this is a good time to get out. You can't get out on the same candle, so you get there. You notice there's also a blue triangle, and we can't see the momentum because these bubbles are in the way. But it's a red square momentum, so it thinks it's going down. So this is the sign to go down to get out, and so we've made this trade here, and it might be a 0.5% gain, but if you're playing options, then this could be like a huge gain. So if you're just like buying here and selling there, you might make a 0.5%, you might make 0.25% profit. So in order to make any money, you might have to make a trade of $5,000. If you did $1,000, 1% would be $100 profit. So if you're trying to get $100 profit, you could get, anyways. But if you had $1,000 at options, you could double your money. You could get 1,000. So again, if you're doing a long trade here from here to there, and you made a 0.5% and you used $1,000 just on a long, you could maybe make $50 minus the broker fees, which is 10, so you could make $40. So on a $1,000 investment. So if you really wanted to make some money, what you'd probably have to do is use like 5,000 or 10,000. That way you can make $500. But for options, you could invest $1,000, and then with that $1,000 you can make $1,000, 100% profit, which would be $1,000. Okay, all right. Example number 2. Again, we're on an uptrend, but I'm zooming in on one of those. I'm zooming in on one of these things, right? So this is example 2 for an uptrend, and so here's a triple triangle. In other words, triple volume, and the last one is the last couple are red squares. So this is saying it thinks it's going to go down. Well, it went down, boom, here, and these little green lines are really helpful. And you see that here, you see the B here, so this thinks it's the bottom. And see this another triangle. Okay, so that one is basically neutral black square. And anyways, so believe it or not, this was the peak and it went back down. That's boom. Some cases that pullback isn't very big. But in this case the pullback is short. You can see it had come down, pull back up, pull back down. That was its low. And if you drew a support line across here like this, you can see that's where that part is. It hit the support line. Now it's going back up again. This little B says, hey, we're at the bottom, and so you can get in here or here, and then you go up, and you're going up here and you're waiting for some kind of indication that you reach the top. Sometimes my program will put a T up here. Sometimes what you're looking for is some kind of change where you have a blue triangle. See all this way, there's no blue triangles. Black triangle, red, black, red, 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 black, black, black. And all of a sudden you got a volume triangle. So that means, and then the momentum is red. That what this is telling you, that people are taking their profits, and now they've sold their stock, Now the demand is for stocks is going down, and the price should drop. So when you see this is what time to get out. Okay, there was a T here for top, and you may have considered getting out, but up here it's a black triangle, so it's not really a legitimate time to get out yet. You should probably wait for at least one blue triangle. I remember on this case we got out when there's blue triangle. Okay, so now we're going to look at one downtrend because I think you get the idea. So now the downtrend it's coming down. It's established itself because you got this peak and that peak. This second peak is lower than that peak, so you have a lower peak, right? They call this a lower high, and this valley here is lower than the last valley. So it's this lower low and a lower high. You're in a downtrend. So this is really, if you see double triangles here, but instead of a green triangle rectangle, instead of a green square, you would see a red square. That would be your sign, right? And again, we never long on a downtrend, so we want to do a short in this case. Okay, so here's the trend coming down, and you notice there's two blue triangles with a green square. That's telling you it's going to go up. I would be really, really tempted in the past to do a long here, but I'm telling you that when I've gone through the paper trading, that sometimes you can really get burned if you're on a downtrend and you try to go long right here. You're in trouble. So that watch out for this. This is a watch out. This is a case where, since we're in a downtrend and the double triangles, double volume tells you to go up, don't do it. Okay, so here's the first example. I guess we're going to do two examples of downtrends. Double triangle. The second one's a black momentum square. The first one's a red momentum. So what I say is this is really a sign that it's going downward. The next blue triangle has a black, so it's kind of neutral. So what we're looking for is to come back up. In this case, the pullback is right down there. It comes down, pulls back, and then we'll go down again. So we're looking for this little peak. So what we're saying is we're looking for it to go down, pull back up, and catch it right here. That's how we catch it, right? So we might see the double. All right, so let's go look at that again. We see the two blue triangles down here. It's going to go down and do the pullback up. This U here, that's the indicator to enter. So then we get into the next candle, and we got this purple line here. That's our enter line. And we go down. We see a B here. Is that really the bottom? Well, it doesn't. There's not a blue triangle on it. There was one here, but it says red momentum. So no, this isn't a real true bottom. There's not a blue triangle. And the previous candle, there was a blue triangle, but it was people were still selling. So that's not a true bottom. We go down here and we see bottoms here and a blue triangle, and sure enough, there's it says it's going down. So okay, that's not the one we want. Then the next blue triangle has a green square momentum. That means it's going to go up, and we got bottoms down here. Those are true bottoms. So we need to get out of there. Right there. And in fact, my program has two bottoms in a row down here, and the next candle has two bottoms in a row. So these two candles are telling you get out. Also, there's that little green dashed line you can't see. So time to get out. So that's why we have our short. We short here. We enter the short there. We exit the short there. And again, we maybe only made 10 cents a share or for $10 stock or 10 cents a share for a $20 stock. So something like that. Might get lucky, get a little bit more than that. Sometimes they call it scalping. Second example, sometimes see all these tops here? That's a good indicator that you're at the top, and if you're downtrend, that's time to start shorting. You can see these T's are blocking the view, but you can see down here you have a triangle, blue triangle, and there's one there. So in this case you can see you got blue triangle, none, blue triangle, no blue triangle, blue triangle. So I know I've been telling you to look for 2 triangles in a row, boom boom. But if you get a series of blue triangle, non, blue, non, or something like that, that's just as good. There's a bunch of activity going on. These are 1-minute candles, so this is telling you to stop. This was a red momentum, you can't see it, and then this is a second red momentum. So you see all these T's. This means it's going to get a time to get in. So you could get in right here, or you could get right there, the candle after these T's, or if you wanted to wait one more, here's another T, and you could get in the next candle here. And then the next blue that comes is a down, right? That's a red momentum, so it's still going down. The next one's red, it's still going down. The next blue triangle is green, right there. That's your time to get out. And notice there's 2 bottoms at the end. This bottom was a false bottom because there wasn't a blue triangle. And these things with the D red, that tells you it's going down as well. So you have plenty of time to get in. And anyways, so that's it. If we were to put it all together, it would look something like this. Here's all the different trends we've looked at. Here's the overall picture. So, well, hopefully that was helpful. These videos are just much for me so that I can remember how to do it, go back and refresh myself. Bye.